Hi, and welcome back to CMG Aerospace Training Channel. We present to you a complete series on how to trade on Binance. Right, you can actually do a full-time serious business on Binance. Just sit at the comfort of your home with just a matter of having your PC, your phone, and maybe your tablets. You can get this app on App Store or Play Store. Right, and then after getting this, you have to sign up and then do your two-factor authentication, verification. Binance is a centralized exchange, and it takes good care of its security features. It's very keen on that, so you have to do that before you can actually start doing this. So the primary purpose of this series, in fact, we have a number of them, about 11 of the episodes. Very short, right? And then in each of the episode we will list and then demonstrate, right, how to actually perform these activities, right? But before we get there, we will first like you to understand or have an overview of what Binance is, its key features, and then importance of it, right? Of course, I wouldn't like to jump into it. So if you're a newbie, in fact, this is the right series of videos for you, right? You can actually sit at your own at your own convenience, in fact at your own time, and then we learn this. So let's first of all have an overview of this Binance app. So Binance primarily uses a combination of hot and cold wallets to manage users' funds, and it is considered as a decentralized, in fact, a decentralized exchange. That is what CEX, CEX. We have a DEX also, so you might want to have a time to look up what these terms are. Exchange, right? So the key features here, like we said it uses cold wallets and then hot wallets. So let's understand these terms. Hot wallets. Now, these are online wallets that Binance uses for day-to-day transactions, right? They are connected to the internet and allow for quick access to funds, which is essential, right, for facilitating withdrawals and deposits. However, they are more vulnerable to hacking due to their online nature, right? Anything that is connected to the internet, besides the fact that it's very fast accessible, the same thing has a downside of having problem with security, right? And then let's look at cold wallets. Now, these are offline wallets used by Binance to store the majority of users' funds securely. Cold wallets are not connected to the internet, making them much safer from cyber threats. Right, Binance uses cold wallets to safeguard the bulk of its assets. You understand? So okay, let's continue. Now, we also said the aspect of it's being centralized. So when you say a wallet is a centralized one, what does it mean? So since Binance is a centralized exchange, the wallets provided by Binance are centralized. This means that Binance holds the private keys to the wallets, right? They have the private keys to them and users trust Binance to manage their funds safely, right? Securely, I should say. So that is what it's all about. So we have the decentralized one and we have the centralized one. So the decentralized one, that is you are responsible for your funds. It's safety, right? The security aspect of your Binance, you have to take care of it. But when it comes to the centralized, then it's managed by the company. In this case, called the Binance, right? So in summary, Binance operates primarily with centralized hot and cold wallets, balancing accessibility and security for its users. So I hope you understand this. It's a very good thing that it uses these two technologies to secure, at the same time making it accessible, right? So in fact, there are different types of wallets in Binance. So if you should open your wallet now, right, you sign in and you have signed up, you sign in, and then you have everything verified, right? If you open it, this is the usual interface, right? I am actually recording this in 9th August, right? 2024, right? So as at the time that I'm doing this, I've actually updated. I have the updated version of the app. So when you open it, you see at the top we have exchange and then Web3, right? So our main focus in this series will be on exchange, the part of exchange. We will also maybe look at the Web3. So the Web3 aspects, we wouldn't concern ourselves much with it because there is more of the decentralized aspect of it. So the best scenario or example is when you are mining, you're a crypto miner, and then you will need to connect an airdrop wallet to your supposed wallet that you want, your exchange that you want to actually do the connection with. So at that place, that's where you do those connections and then other functions that you can use. But mainly, our focus will be on the exchange side of it for trading. Right. So let's look at these types of wallets within Binance. If you check there, we have overview. The overview here, we see the total balance, and then we see deposit, withdrawal, buy, transfer. That under that we have crypto accounts, funding, earn, spots, and you see at the top there, just following the overview tab, we see spots, funding, earn, features, margin. There are a number of wallets in Binance, and they are traditionally, or in fact, they are unique to Binance. So what it means is that in Binance, you don't create your own wallet. Everything is there. So, and every wallet has its use, right? The moment you start to do something, automatically the app chooses that for you. So you see how powerful it is. You don't have to concern yourself with the creation of wallet and all that. But if you want to do a creation of wallet, that is done under the Web3 tab. Right, so let's see. So let's see. We have the types of wallets here. So within a Binance account, there are several types of wallet designed for different purposes. Right here, we have the main one to be the spots. You see the spots wallet, just next to the overview. Right. What is the purpose of this? It is used for holding and trading cryptocurrencies on the spot market. Don't worry, we are just going to have an overview. Then we will explain them into detail later. We also have margin wallet. Now, margin is used for trading borrowed funds, right? Borrowed funds. You heard me right. Borrowed funds, allowing for leverage trading. Yes, you can actually borrow funds in Binance, use it for yourself, and then later pay at a fee or something of that sort. So I doubt maybe this is the first time you're actually hearing this, and it's true. We have futures wallets. Now, futures wallet for trading futures contracts. We'll look at them later. We have earn wallets for participating in Binance end products like staking, savings, and liquidity farming. We also have funding wallets. So funding wallets, what is it used for? For transaction related to P2P trading. Our main focus, I think this is one of the things that we'll be looking at, P2P trading. We have Binance Pay and we have the Binance Card. Now, we also have fiat and spot wallets. What are they used for? For holding fiat currencies. When I say fiat currencies, the example is the USD or the Euro fiat currencies, and then cryptocurrencies for spot trading. We also have pool wallet. What is it used for? For participating in Binance mining pool. Binance also gives that feature. Binance is very powerful and I love it. We have options wallet for trading options contracts. Right. Each wallet serves a unique function. Take this note. A unique function catering for different aspects of cryptocurrency trading and investment. Right. So that is the key wallet, or the various wallets that you can actually find in the Binance app. Right. Then one might ask, can you also create your own wallet in Binance? Right. Choosing a wallet type. I think I've said something. I gave you a glimpse of that. But let's look at it in depth. So on Binance, Users cannot create their own custom wallets or choose wallet types in the traditional sense. Like I told you, like creating your own wallet is only under the website that you may, in fact, you can do that. Now, instead Binance provides a predefined wallet types for specific purposes, right? You can perform certain activities or use specific features. The corresponding wallet is automatically created and used for those transactions. So I hope you understand. So example is spot wallet is used automatically for spot trading. Margin wallet is used when you engage in margin trading. Futures wallet is used for futures trading. You understand? And then funded wallet, which is the most popular one, is used for P2P trading, Binance Pay, and then the Binance card. So I hope you understand me. So you manage your funds by transferring them between these predefined wallet types as needed for different trading and investment activities. So I hope you get a difference now. Right, don't worry, we will dive into them shortly. So let's have explanation or idea on some of the key factors right, related to Binance, right? Like I said, you may only know that Binance is used for buying and selling crypto, right? But that's not the only thing. It's not limited to that. In fact, there are various strong aspects of it that you may have not even heard of them, or maybe you don't even understand them. Now, one of them is what? Launchpad. So let's have an overview of what is Launchpad. Now, Binance Launchpad is a platform that helps new blockchain projects raise funds and increase their visibility, right, through token sales, often referred as initial exchange offerings, that is IEOs, right? Users can purchase tokens of new projects directly on Binance, right? Directly on Binance, on Binance, right? Users can actually purchase tokens of new projects directly on Binance using Binance Coin, that's BNB, you may have heard that, or other supported cryptocurrencies. You understand? That's Launchpad. You may have read it. Let's see the importance of this. Maybe this explanation is too basic. So let's see the importance of it. Now, access to early projects. Now, if you're a crypto miner, I think you understand this very well. So on this page, we also do crypto mining, give you crypto mining opportunities on the famous airdrops, and then we mine them, and then if everything goes well, we have our reward. So that is it, right? So under that, it gives users early access to potentially promising projects before they are publicly traded. You understand? Something like a pre-sale. Now we have investment opportunity. Participating in Launchpad can be a way to invest in new projects with the potential for significant returns if the project succeeds, right? And then the third thing is supporting innovation. It also supports the growth of the blockchain ecosystem by helping new projects gain the funding they need to develop their technology, right? Just listen very carefully. I don't know if you would actually enjoy this or appreciate this when you are a crypto miner, right? So don't worry. Now let's look at the second thing called the P2P. I think this is the most interesting thing to most of us, in fact, watching this series. Now, overview. Now, P2P trading on Binance allows users to buy and sell cryptocurrency directly with each other, right, without involving an intermediary. Transactions are conducted using local currencies, the interesting part of it. And then users can choose from various payment methods, such as bank transfer, PayPal, or cash. So in my case, I'm in Ghana, West Africa, and my case, I use the Ghana cedis, right? In Nigeria and other, they use the Nana and all that. So you see how powerful and convenient this can be. You don't need any intermediary, right? Very cool. Now, let's see the importance of this. Now, local currency transactions, right? It enables users to buy and sell crypto using their local currency, which can be more convenient and accessible. Lower fees. P2P trading often has lower fees compared to traditional trading, making it cost effective, right? The last one is flexibility. Users can choose their preferred payment methods and negotiate directly with other traders. Yes, offering more flexibility. It is true. Now, the third thing is on margin trading, right? Margin trading. Now, what is margin trading? Now, overview. Margin trading allows users to borrow funds. The interesting aspect of it that many of us may not have known, right? So it allows you to borrow money. We will actually demonstrate this. You will see this. Borrow funds to trade larger positions than they could with their own capital alone. On Binance, users can trade with leverage, right? Which multiplies the potential gains and losses, right? Let me take that again. On Binance, users can trade with leverage, right? If you are a forex trader, you actually understand this leverage thing, which multiplies the what? The potential gains or losses. The borrowed funds are collateralized by the assets in the user's margin wallets. Let's see the importance of this. Increased buying power, right? Now, it allows users to trade larger positions, potentially increasing their profits from successful trades. Hedging. Now, margin trading can be used to hedge against potential losses in other positions. That is very typical in forex trading, right? Now, higher risk, higher rewards, higher risk, higher rewards. What is it? It is more advanced. It is a more advanced trading strategy that can amplify gains, right? It also comes with higher risks due to the potential for significant losses, right? So we are going on. The fourth thing that we can look at is what? Binance savings. This is very important, right? So margin trading and then Binance trading, very important. Now, Binance savings, what is it? Now, Binance savings allow users to earn interest on their cryptocurrencies by lending them to Binance. If you didn't know, I'm telling you today. There are two main types. We have the flexible savings, where users can withdraw their funds at any time, and locked savings, where funds are locked for a fixed period in exchange for higher interest rates. So you may have not known this feature of Binance, but if you are a crypto miner like myself, during mining, right, there are some of the phases, or a phase that the project, the team actually gives you the opportunity to stake some of your tokens or your coins, right, and then over a period with an interest rate. So when the time elapses or is due, they give you a percentage of that, giving you your capital, they're releasing your capital back to you, right? And then this can have two types. We have the flexible, where within the period you can actually withdraw your money at any point, or we have the fixed one that you can only get access to it at the end of the period. So it is very subjective, as in how you want it. So you first have to check that. So we are looking at the importance. That's the passive income. So users can earn passive income on idle crypto assets. You are just sitting there not doing anything. Flexibility, right? Flexible savings offers liquidity, right? Allowing users to withdraw their funds whenever needed. Higher returns. Locked savings typically offer higher interest rates. That's a good thing for those willing to commit their funds for a longer period. Very, 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 very good. Right. So that was for Binance savings. Right. So that is Binance savings. So let's have a look at spot trading. Right. You may have heard of what spot trading and then derivative. This sometimes, if you're a newbie, can be very confusing. Right, but don't worry, stay with me. Don't get bored. Listen to this very carefully, because the reason why, in fact, I could have even jumped straight into the demonstration of the various activities: buying, selling, swapping, transferring. You see, a number of them can do that. But the point is, what if you don't understand these things? There are many a time, because we don't understand these things, when we are operating on Binance. In fact, I've been there before. because I lack the understanding, operating these things can be very daunting, right? Discouraging. Sometimes I'm afraid because there's this caution everywhere on the internet among your peers that if you don't take care, all your funds will get lost due to lack of know-how. So if you are transacting and you make a small mistake, any small mistake, all your funds will be lost, right? So that is one of the reasons why people are even afraid to start using the app. But trust me, with practice, you become perfect. So let's look at spot trading. Right, so spot trading refers to the buying and selling of financial instruments, right, such as cryptocurrencies, for immediate delivery. Look at the key term here, immediate delivery on the spot date, which is typically 2 business days after the trade date, right? In the context of cryptocurrency exchanges like Binance, spot trading involves the direct exchange of digital assets at current market prices. Now, let's look at some key features of this. Now, 1, immediate settlement. So transactions are settled on the spot. The key meaning. In fact, it's self-explanatory. The key word here is spot. Right. So meaning the transfer of the asset and payment occurs almost instantly or instantaneously. Right. Let's look at the second feature, ownership transfer. Right, when you buy a cryptocurrency on the spot market, you take immediate ownership of it. Take note of this. You go to derivative and you see the difference there. Now, market prices, right? Trades are executed at the current market price, which is determined by supply and demand. Right, so the next thing is what? No leverage. Now, unlike margin or futures trading, spot trading typically does not involve borrowing funds or leveraging your position. You understand this more if you're a forex trader, right? Now, spot trading is straightforward and suitable for investors looking to buy and hold cryptocurrencies or make immediate exchanges without engaging in more complex trading strategies, right? Like people, if you don't want to worry yourself sitting behind a PC doing analysis, drawing charts, doing that and that, and especially in forex or FX, people can engage in this. It's less stressful. It's not time consuming, less demanding, right? So it's straightforward and suitable for investors looking to buy and hold cryptocurrencies or make immediate exchanges without engaging in more complex trading strategies. You understand me? So now let's look at derivatives. After that, we will look at in summary, we will look at the difference between the two. So let's listen to this very carefully. If possible, you can pause the video and assimilate the information about what the spot trading. Now let's look at derivatives. Now, derivatives are financial instruments, listen, that derive their value from an underlying asset, such as a cryptocurrency, stock, or commodity. So cryptocurrency is also here and it's at the top there. It depends on which financial market that you are engaging. In fact, when we take the financial market, many a time people think that the financial market is just one-sided. No, the financial market is very, very broad. We can take the crypto, we can take stock, we can even take the stock indices, right? The stock indices, we have the stock, we have FX, we have crypto, commodities. In fact, there are a lot of them, right? So that's what we are talking about. So with the derivative and spot, you may get confused, but it is the environment that we are in that we are talking about. So derivatives are financial instruments. You know financial instruments, any of the assets that you know, that derive their value from an underlying asset, so such as cryptocurrency, stock, and or commodity. Instead of directly owning the assets like the in the spot, right? In the spot, you just own it. So we are saying that instead of directly owning the assets, you are essentially betting on its future price. Derivatives are commonly used for hedging risk or for speculative purposes. So you don't own it. You are only using something we call a contract size or a lot. So don't worry. We'll look at that. So on Binance, the main types of derivatives are futures. The main types. right, are futures contracts. These are arrangements or agreements, right, to buy or sell a specific asset at a predefined price on the what? On a future date, right? On a future date. You can take this in again. Let me take it. It these are agreements to buy or sell a specific asset at a predefined price on a future date. There are two primary types of futures contracts on Binance. Let's look at them. There are two. We have USDT margined futures. USDT margined futures. These contracts are settled in USDT, but are still the tether, right? You use USDT to trade and settle your contracts. You use USD to trade and settle your contracts. We have the second thing called the coin margin futures. These contracts are settled in the cryptocurrency you are trading, right? For example, if you trade Bitcoin futures, your profits or losses are settled in Bitcoin, right? So let's look at the importance of derivative. Now, leverage one, you can control a large position with a relatively small amount of capital, right? For example, with 10 times leverage, you can control about $10,000 worth of a cryptocurrency with just $1,000. You understand? So you're giving the leverage. Now, hedging also, you can hold a lot of particular cryptocurrency and are concerned. It's a wait. If you hold a lot of a particular cryptocurrency and are concerned, right, about a price drop, you can use derivatives to protect yourself. You understand? So price can drop up and down. This very fluctuating. So that nature, if you want to avoid that in the hedging, you can use this technique, right? It's actually using by big institutions in the trading, right? So wait, so that is so. Let's look at the speculation for specifically. For speculation. Now, traders often use derivatives to speculate on price movements without actually owning the underlying asset. So this is one key feature of what derivative, right? You are just trading around the asset. Let me put it that way. But you are not owning the asset, right? So that is what it means. Instead of buying and getting the assets, having it as your own, you don't do that. You are doing around something called contracts and all that. So traders often use derivatives to speculate on price movement without actually owning the underlying assets, right? So the difference between derivatives and spot trading is fundamental, right? And understanding it will clarify how these trading methods work. You understand? So spot trading, let's look at that. I told you we are going to have a summary of that. So spot trading involves the immediate buying and selling of actual assets, right? Like cryptocurrencies at the current market price, also known as the spot price. When you make a spot trade, you are directly exchanging one asset for another. I hope you understand. For example, if you buy Bitcoin with USDT in a spot trade, you immediately own the Bitcoin. That's one aspect of what the spot trading. You are owning it. If you buy, like in your Binance, if you buy a Bitcoin with USDT in a spot trade, you immediately own the Bitcoin, and it is deposited into your spot wallet. So automatically, I told you that. Now, let's look at the key features. Immediate settlement, right? The transaction is completed on the spot, meaning you get the asset right away. Ownership, you actually own the asset you bought. No leverage, right? No leverage, one key feature. Now, in most cases, spot trading does not involve borrowing money or using leverage. So the risk is relatively lower, right? Now, let's look at derivative trading. Now, on the other hand, derivative trading on the other hand involves trading contracts that derive their value from an underlying asset, such as Bitcoin. In this case, you are not actually buying or selling the asset itself, but rather a contract that represents the value of the asset at a future date or under certain conditions. Right? There are conditions. In fact, this is an agreement. There are a lot of agreements around this. Right? But when you are doing this behind your PC, it looks what easy, because we are just a retailer. You understand? So the most common types of derivatives on Binance are futures contracts. We have looked at that already. Right? So the key features of what derivative trading. Right? Now, no immediate ownership. You don't own it. You don't own the underlying asset. Instead, you are trading a contract based on the asset's price. Leverage. Derivative trading often involves using leverage, right? Meaning you can control a larger position with a smaller amount of money. This can apply this can amplify both gains and losses. Speculation and hedging, right? Derivatives are commonly used for speculating on price movements or hedging against potential losses in your existing portfolio, right? So a summary of this, right? Ownership. So in spot trading, you own the asset. In derivative trading, you don't own the asset, but a contract based on it, right? Now, settlement. Spot trading is settled immediately. Derivative trading settles at a future date or under specific conditions, right? Only look at the list. Risk trading. So let's look at the risk. So we have looked at ownership, settlement. Now let's look at the risk aspect of this both technologies or techniques. So spot trading generally involves less risks because it doesn't use leverage. Derivatives trading can be riskier due to the use of leverage. In essence, spot trading is straightforward and involves actual assets, while derivative trading is more complex and involves contracts that derive their value from assets, often with the use of a leverage. So, each of these features provides unique opportunities and benefits, catering to different types of users and their financial goals on the Binance platform. Right. So I think with this information, right, you'll be good to go, right? Even though it looks too much, too wordy, too much of technical terms and all that, right? But it's important that you understand these things, right? So you can actually be watching this video from time to time. You can actually download this video and watch it from time to time, right? From time to time to actually understand this thing. But it's very, very important, because the problem with crypto, the fear in engaging in crypto, is this lack of information, this lack of education. Because if you actually understand these things, then using the app or engaging in any transaction, you'll be okay, right? You'll be protected. You have no fear, no worries about all these things. So right, I think this will bring us to the end of this episode, the overview of what is cryptocurrency. Yeah, the key features on cryptocurrency, and then the key features of Binance. So in the practicals, I will not bother myself explaining anything. It's just a matter of demonstrating them, and that will be in the next episode, right? Episode 2. This is overview of Binance, the key features and all that. So thank you very much for watching. Please like, subscribe, and share. We also provide FX lessons, right? Structured for beginners, intermediate, and advanced. You can actually do this at your convenience, right? So we will see you in the next video. We will say bye for now. Ciao.